Hey there, and welcome to the September 2021 edition of the monthly market report. Um, so today I am going to hit 3 topics on the video version of this report and hit 5 on the written portion because it just gets really long-winded and there's a lot of information. We're going to cover pending home sales, affordability, and interest rates here on the video portion, and then more local data in San Antonio on the written portion. So after you're done with the video, head over to the blog maverickhomesanddneighborhoods.com and check out the actual local information that is relevant to you and where you are living. I'm Krishna Perkins, and it's always my goal to bring you the most up-to-date information as possible so that you can make an informed decision that best fits your household. So today we're going to hit pending home sales first, and that has been one of the biggest headlines that you can find out there. And the headline, reads something like, pending home sales are down. Is the market, is this a sign that the market is shifting? Well, yeah, sure, it is. But part of that is going to be seasonal. Okay. And I want to share a quote from Odetta Kushi. She's the deputy chief economist from First American. And I quote, "We are seeing some signs of softening in the housing market, but context is important here. We're still very much in a seller's market, but we are seeing some early signs of softening." Okay, so I'll put this graph up on the screen, and it shows you very clearly at the end a downward arrow on this chart here for pending home sales. And this is the latter part of the year here, September. And that's true. We are seeing a decline there. But this decline may also be just a seasonal type decline, even though we have been seeing some sellers put their houses on the market later in the year. We don't really know where that's going. We may see some more inventory, we may see a bounce here. And further, we want to look at the dotted line here, which is a historical healthy level of pending home sales according to the National Association of Realtors. And if we further examine this and look at 2019, January 2019 and beyond here, we've been above that dotted line for quite some time. I don't know what that looks like for San Antonio, but this is a national average here, and really, San Antonio's been in a seller's market, well beyond 2019. So we were already in a seller's market here. Further down here, we have a chart here that shows you that San Antonio experienced a decline of 2.7% in pending home sales in August, versus a 17.7% increase in pending home sales in 2021 August. Okay, and then 2019, which we were still in a seller's market, at 1,986 pending home sales. So we're still solidly in a seller's market. Maybe we have a little pullback here. It may just be seasonal, but I think we're really looking at a lack of inventory to help push in more pending home sales. We're just not seeing enough inventory. We have a strong demand, but not enough homes on the market. Maybe those pending home sales are a lot higher if the right homes were on the market to absorb the buyers. So let's get down to affordability. All right, so again, National Association of Realtors here providing the content for this graph that we're looking at. And beginning April 2020, we're at around $1,000 principal and interest payment average here. And as you can see, getting into 2021, we have a significant increase in that mortgage payment all the way up to $1,255. That's more. That's just principal interest. So taxes, insurance is going to bring that even higher, and so that really indicates that we're seeing a big spike in mortgage payment and affordability. They're becoming less affordable, not unaffordable. Okay, mind you, but less affordable. We'll get it. We'll get into that here locally again. This past year here, we looked at a 13.1% increase in August median sales price. Okay, that's the median sales price, $260,000. That's a 13% jump. Okay, over last year, which had a 5.9% jump. So we're definitely headed in the upward trajectory of what people can afford. It doesn't mean it's unaffordable. It just means that we're starting to see a lot more, higher payments here. Now, in perspective here, let's look at what mortgage payments as a percentage of income looks like. And the reason this is important is because it shows, the guidance from National Association of Realtors at 25%, and that basically says that if you are 25%, you're spending 25% or less of your income, then the payment is considered to be affordable. Now, we all have our own definitions of what's affordable to us and what's not affordable, but based on this guidance and the historical averages, okay, because interest rates fluctuate back and forth over time. The historical average is 21.2%. That's what people usually are paying out of their percentage of income. And right now, the percentage with today's interest rates and everything else in consideration, their taxes, insurance, is 17.1%. Okay, so we still have room to run, to close that gap on historical averages. And we have a lot more room to run if we're using the National Association of Realtors guidance for percentage of income and your payment. So we can still see increases in prices. We can still see increases in interest rates, which experts are predicting interest rates to go up. They'll still be low, but compared to the historical averages, but they are going to go up. So couple that with the higher prices, and we will see the affordability continue to go in a direction that buyers don't want to see it to go. Interest rates. Right now, speaking of, so we are at 2.87% this week. Again, historically, we've been as high as, according to this chart, we've been as high as 12.7% back in the 1980s. That's 40 years of data right there. And we've been at the 8% mark a couple of times in that time period. We've seen 6%. A little over 14 years ago, I had a rate of around 7.25%, and I thought that was great. Before the pandemic, we were around 4.5%, and then we started seeing declines in interest rates. What the rates are going to be in 6 to 12 months, we'll see. I think experts are predicting around 3.5. So we'll see how that plays out and keep an eye on that. So what does this all mean for buyers that are thinking about jumping into the market? Are we going to see affordability disappear overnight? No, I don't think so. I think the interest rates are going to continue to help buyers that can get into a contract with a seller and purchase a home successfully and have an affordable home. For sellers, I think potentially you're looking at some more upside. If you're thinking about selling and making a move, should you hold on to the home right now and wait for more upside, that just depends on your situation. If you are wanting to sell and move up, buy a bigger house, I think that the better move would be to sell sooner rather than later versus risking a higher interest rate and a higher price on a bigger house. If you're moving down, if you're downsizing, if you're selling a large house, you may have some time to wait, because you're going to be looking at a smaller smaller home, smaller price tag. So you have a little more latitude if you're looking to downsize, in making that decision. But obviously, you got to make the best decision, for yourself and your household, with the information you have. So check back in, on the next video. And if you have any questions, you can reach me at 210-260-6617. That's my direct line. And I look forward to helping you and answering your questions whenever you have them. Have a great day.